Wonderful. Okay. Hi, everybody. My name is David Addy, and I am the mentor for the Vido FX Academy, and I'm happy to be your mentor. Today is the beginner's course 101 for Forex trading. But before we begin, I want to pray. Father, we thank you for this wonderful journey we are going to start as beginners, for we know that you carry us through for we to be advanced traders and profitable traders, as successful as we wish and we want to be. We thank you so much because that's your delight. We thank you in Jesus' name. Amen. Good. So now today we start by getting to know Forex from the beginning because the beginning of everything, you have to know what it is. If you're going to cook, you have to know everything about it from the lighting of the gas, from the kind of saucepan that you use and all other stuff, the ingredients for the food as well. Any business you are going into, Forex is a business. It's not a get rich quick scheme. It's a business. So any business you are venturing into, you are supposed to um, know more about it. And that actually is a good thing. So it's good that you are trying to invest into yourself by knowing how to trade Forex because it's one of the businesses that gives you the kind of money you wish to have a financial freedom. So without wasting much time, let's get on board. Okay, so as a beginner level, we are looking at the foundation for trading or for Forex trading. And with the model one, as in the introduction to Forex trading. What is Forex? What exactly is the Forex I'm going to trade? What am I going to do? What is it? Forex or foreign exchange is the process of exchanging one currency for another in a decentralized global market. Exchange of one currency with another. Wherever there is a market, there are buyers and sellers. Wherever there's a market, there are buyers and sellers. If there are buyers only without sellers, then there's no transaction. But when there are sellers only without buyers, there's also no transaction because wherever there's demand, there is supply. Yes, so that's Forex for you. Forex has a global big market where there are buyers and sellers exchanging currencies, one currency for the other. That is Forex trading. One currency for the other. Exchange of currencies. That's Forex trading. So an example is that exchanging US dollar for euros whilst traveling to an European country. You can go and use dollars in European countries. So when you get there, you try and change the dollars into euros. Likewise, if you are going to Ghana, you would like to change the dollars into Ghana cedis for you to buy in these local markets, for them to also understand what you're buying so that there'll be cordial relationship between the buyer and the seller. Yes, that's how it is. Now, everything has an history, has somewhere it came from. First of all, in the beginning, they have Forex but on a ground basis where people do a physical transaction of money from one source to the other. But later on, in 1971, they moved this whole system into an internet system. The whole transaction that was physical, they move it into a system where people can trade online. Yes, so that's one of the things. Now, let's move to how Forex differs from other markets because you've heard about stocks. Are stocks the same as Forex? Or Forex is different from stocks? What are they saying? What is bonds? Are bonds the same? All these things, we will look at it. First of all, I want to differentiate between a stock and a Forex trading. Forex operates 24 hours a day, 5 days in a week. So it starts from Monday and ends on Friday. It starts on Monday, ends on Friday. That's Forex trading. So for Forex traders, our work begins on Monday, and on Friday, that's it. We don't work. Yes, it begins on Monday and Friday, that's it. We are off. But there are other brokers, which we'll talk about later, that they offer instruments where you can trade every day, 24/7. But for Forex trading, with pairs such as Euro USD, meaning swapping an Euro for US dollar or swapping a US dollar for Euro, or GBP JPY, which means you are swapping a Great British Pound for Japanese Yen or Japanese Yen for Great British Pound. That is as simple as that. So when we are dealing with such pairs, we are looking at trading it for 24 hours a day, but 5 days in a week. So we have Saturday and Sunday as our resting zone. Then on Monday, we begin work. On Friday, we end. That's exactly how it is. But when we come to stocks, stocks are different. Stocks are different. Stocks are different in the sense that stocks deals with markets. Stocks market deals with companies' performance. So stocks such as Apple, stocks such as Google, stocks such as uh, Microsoft. So when you buy such stocks, when Microsoft begins to improve and their their value increases, you have that difference as your percentage of uh, amount that you bought, a percentage of shares you bought. That's the money you will get. So this one deals with markets or deals with companies' performance, whilst Forex deals with transactions of different currencies from different um, economies or different countries. Yes, and it's affected by so many things, which we'll be looking at as we go forward. So now, who and who participate in the Forex market? Is it those on the ground people calling themselves Forex traders, or there are major players in this game? We don't know till we check. So we have the central banks. For the central banks, they control the monetary policies. That's the Federal Reserves. So these people are the big players in the game, the very big players. They produce huge monies in doing these things. We have the commercial banks. They facilitate currency exchange for clients. Those are the commercial banks. All these people, they have huge amount of money that pushes a particular amount of volume. And we have the hedge funds and institutions. They trade large volumes for profit. If you watch movies like uh, The Billionaires, or if you watch movies like The Wall Street, if you watch movies like The Big Shots, you'll be seeing hedge funds players that trade with huge volumes. In a day, someone can make $18 million just like that. And you can actually lose the same. What I'm talking about here is that they have huge volumes of money, unlike the retail traders, which are individuals like me and you, whereby we have to leverage on other people called the brokers in order for us to be able to also participate with the big guys in the game, for us to also make some wonderful profits. You see, that's how it is. So the retail traders are you and I. So we leverage on all these people and then we are able to trade with them. Although we don't have such huge capitals as the hedge funds and institutions, we are able to also trade with what we have. So the brokers makes us have the platform to trade with our $10, to trade with $100, to trade with our $1,000 and our $10,000. Yes, that's how it is. Okay, so coming to model two, which talks about the basics of Forex trading. The basics, because whatever it is that you're doing, you have to know the basics of Forex trading. So the basics of Forex trading talks about the currency pairs and their types. We have there are two currency traded against each other. We have one, the base currency and the quote currency. Every currency pair that comes in the front is the base, and the quote is a currency pair that follows suit. So if we have something like GBP USD, that means GBP is the base currency and USD is the quote currency. And when we have Euro USD, Euro is the base currency and USD is the quote currency. If we have USD JPY, USD is the base currency and JPY is the quote currency. I hope you understand this. Good. So now we have types of currencies. They are not the same. They are different types of currencies. Now, the first one we are talking about is the majors. We have major currencies, and these currencies are the one that has the USD attached to them. We have the GBP USD, Euro USD, NZD USD. We have the USD JPY, and so many others like AUD USD as well. So every USD pair is a major pair. Yes, but there are other USD pairs that are not majors. But these few USD pairs I've mentioned are major pairs. Now, let's talk about the next one, which are the minors. We have minor pairs. So for the minor pairs, they don't have USD attached to them. So some pair like Euro JPY, that is the Euro versus the GBP, as in the Great British Pound. Euro versus the Great British Pound. We can have another such as GBP JPY. We can have another such as Euro AUD. We can have another such as GBP card. They are minors. Now, let's go to exotics. With the exotics, they are pairs that are not really traded a lot. So for them, we have USD ZAR and USD TRY. USD ZAR, and the ZAR there is for the currency of South African. It's a South African currency, the ZAR. So South African currency is also being traded. So USD ZAR, if you see anybody trading USD ZAR, they are trading as in they are trading the United States dollar versus the South African dollar. South African rand. Yes. Thank you very much. So we have an example that a quote of Euro USD is 1.1050, means that 1 euro is equal to 1.1050 USD. 1 euro is equal to 1.1050 USD. So, for example, in Ghana, we can say that now the dollar is equal to what? 14 or 15. So for that, this is how we are going to write it. We are going to write US dollar GHS, as in Ghana cedi, US dollar Ghana cedi. That means 1 US dollar is equal to 14 or 15 Ghana cedis. So US dollar Ghana cedis is equal to 15. That's how we will write it, which implement that 1, which is the base currency, that is the US dollar, is equal to 15 Ghana cedis, which is the quote currency. I hope you get it. Good. Let's continue with the next slide. So now we have the terminologies, the Forex terminologies. Yes, every institution has a terminology. Business has terminologies, and accountant has terminology. We have engineers that have terminologies, and all other fields we know have terminologies. Now, Forex also has terminologies. One of the terminologies maybe you've heard before is PIP. A PIP is the smallest price movement. Is the smallest price movement. So PIP is like an atom in chemistry. So whenever price moves, every step price takes is called a PIP. That's the smallest price movement. It's called what? A PIP. Yes. So somebody will say, oh, I made 10 pips, or price is in 50 pips, it's in 30 pips, it's in 300 pips, it's in 1,000 pips. That means price have moved 1,000 pips. Do you understand? Yes. So somebody can also say, I got 50 pips in a trade. That means for him, he was able to get from 1 to 50 pips in profit, which with his lot size can accumulate a certain amount of money. So now let's talk about lot size. So lot size or lot is a trade size. One lot is equal to 100,000 units. Lot sizes are in variations. So we'll talk about that one when we get to our advanced courses. Yes, our advanced courses. There are a lot of things for me to talk to you about in the advanced courses. So if you register for that, you likely know a lot. Uh, the lot size it talks about, we have for Forex, we have 0.01. That's a decimal ratio, 0.01. But every pair has a certain amount of volume that the lot size can push. Some are weak, some are strong. For gold, 0.01 moves a lot because gold is volatile than, let's say, Euro USD. Euro USD 0.01 might not move or give you much money like gold 0.01 would give you. As simple as that. Now we have something called leverage. Leverage is to borrow funds to increase position size. Leverage is to borrow funds to increase position size. One of the things I told you earlier on is that we have some people we call brokers. They give us the platform and opportunity to be able to trade with the big guys with our $10. So actually, the term here makes it clear that we leverage on their funds so that we'll be able to be part of the community of traders to trade with them, although our money is small. So we leverage on the brokers to be able to be on a certain platform or a global trading platform in order that we can also make a profit with our small money. Yes. Now we have margin. Margin is a required deposit to open a leverage trade. So margin is a range where when you can open a particular amount of trade, like 5 positions. But when your margin reduces, sometimes you can open more trades. But your margin increases when you are making progress, so you are making more profit and your account is increasing. So maybe when you have $10, your margin might be 1. You can open only 1 position. When you have $100, you might open 5 positions. So imagine you have $1 million. How many positions do you think you can open with a particular lot size actually? Yes. So you can open more positions with maybe a list or small lot size or a quite big lot size. You can open more positions than when you have a small amount of money. Yes, that's how simple it is. Now, let's go to the next one, which is how to read Forex codes. How to read Forex codes. We've already talked about pips. So now how do you know if price is going up that you've made 2 pips, I've made 3 pips, I've made 4 pips, I've made 5 pips? So the first thing is that when we look here, it said we have bid and ask price. Bid is the sell and ask is the buy. So I told you in the market, we have buyers and we have sellers. We don't have only one person, we have buyers and we have sellers. An example is that Euro USD is 1.1050 slash 1.1052. That's what you'll be seeing when the price is reading. It reads both ask and bid. So now the difference between these two is what gives us the pip, whether we are increasing in pips or decreasing in pips pertaining to our execution, whether we are buying or selling. That's simple as that. So now the difference between these two is 2, which is this 2. So it gives us 2 pips. So when now, yes, it gives us 2 pips of spread. As simple as that. More explanation will be given in the advanced classes. We have time frames in Forex trading. Time frames in Forex trading. First of all, you'll be hearing a lot of things like the time frame, the higher the time frame is good, the lower the time frame is cap. So many things. You'll be hearing a lot of things like the top-down analysis, it deals with time frames. And time frames are very important. I remember when I was starting Forex, I didn't know anything about time frame. I was seeing it on the chart, but I don't understand it. Likewise, maybe you will not understand. But when you join my course, you will get all these things and you will understand. Remember to invest in yourself because one day you'll be making money and you'll be very happy. Yes, so the time frames are intervals in time frames. So every when you are on a 1 hour time frame, every candle that closes on that time frame is in an hour. So when a candle opens, it will close in an hour. Another candle opens and closes in an hour. But in that same 1 hour candle, when you move to 30 minutes, you see two candles in that same period. When you move to 15 minutes, you see four candles in that same period because 15 minutes has four candles to make an hour. That's how it is. So we have different, but there are ways in which we can use all these time frames to be able to trade well. You get it? But there are also types of traders and the time frames they use, which I also teach you. Types of traders and the time frame they use. Example is that the scalpers. Scalpers are people that they want to make money quickly. They don't have that much time to waste on the chart. So they see an opportunity, they scalp 1, 2, 3 minutes, 4 minutes, they are off. So for them, they use the lower time frame just to see short opportunities and just pick one or two and then leave. But the swing traders, they are those that don't have much time to watch the charts. So they would love to go to the higher time frame, see maybe 4 hour or daily candle closing, and entering trade and leaving it for like 1, 2, 3 days before coming to check their profits because they don't have much time. They are doing other stuff. But the scalpers, they can watch the screen for long and finding opportunities in a shorter time zone and making profit. Yes, so this brings me to the end of my first beginner's course, which is Model 1 and Model 2. And we'll continue with the 3, 4, 5 on the next video. And I hope you understood all that I said. And if you want to join my video, my channel or my Telegram page, the link is below. So go to the link down there in my bio and join our free Telegram page where you'll be getting exciting tutorials on certain things you're supposed to know as a beginner. And I'm ready to make sure that you understand all you need or all it takes to be a successful trader. Yes. Thank you very much for joining and for watching. Remember to subscribe to this channel and click on the bell so that anytime I drop a video, you'll be able to also benefit from it. Thank you very much. See you in the next video.